Well, hello again, everyone, and welcome out to another Currency Room. This is Ankit from Maverick Currencies here, and we are going to be covering the markets for this week and talk about June 5th to June 10th, which is the next week. So let's talk about markets. Let's see what really moved in the markets today or this week, and then how we're going to prepare ourselves for this upcoming week ahead. Again, this is where we get to do our planning, and we start to hunt and look at the areas where we can actually get nice little opportunities. So let's talk about markets first. And this week has been quite a back and forth. So overall, equity markets did pull back, but the pullback was about 1%. If you look at the markets overall, they're up about 7.5% from the bottom. So again, you can see that those gains are still there, even though we gave up a little bit of gains this week. It wasn't big enough. So the market looks in a whole different environment as it was, right at the bottom, or even last week when actually we closed to the highs of the week. So we'll take a look at charts. We'll look at some visual representation to see where exactly the pivot points that we can see for further move up or down. Now, Bank of Canada raised rates this week by 50 basis points, and the interest rates now are about 1.5% in Canada. So we are now getting these similar movement across the board. All major central banks are raising rates, and Bank of Canada, again, is being one of the most hawkish ones. They have started raising rates before the FOMC did, and they're still committing to raising rates further up to about a 3% mark. So as you can see, there's a lot more room for the Canadian dollar to run, and the anticipation is still quite hawkish. So that's something is very important. It's not just a rate hike that we get, but it's also about the forward guidance that we get with it. Now, outside of the currency world, if you take a look at cryptocurrencies, they had quite a negative week as well. Again, overall, I think it was not as bearish week, but if you look at the movements that we had early in the week, we gave back all the gains, and that's again a very bearish sign, especially when you're trying to find a bottom. So this is marks a 9th consecutive weekly decline. And I was actually going back in history. And again, we don't have that long of a history of cryptocurrencies, but that's the longest decline that we have seen. So the cryptocurrencies are certainly not the place to be. And anybody that's wishing that they bottom out so far, let the market tell you, let the chart tells you. And we are not really seeing any of those price action yet. Outside of the cryptocurrency world and economic reports, we had Australian GDP that was slightly better than expected. And again, most important that we had the U.S. employment report today. And that was a bit of a mixed report. We beat on the employment change, 390,000 versus 325. But the unemployment rate did tick up a little bit. This is where overall the jobs report was better than expected because the expectation was a lot bearish for this jobs report. So I think at this point, market did sell off after the report, and we did notice the dollar go up. And this is kind of reaffirming the whole good news is actually bad news for the market, because that is going to keep the Fed to continue raising rates, and that's not going to provide a deterrence. And that's exactly what we're getting here. So as we finish this week off, let's talk about the weekly performance and then see exactly where the movement was and what kind of percentage move that we got. So when we can see that the S&P is down 1%, the VT World Stock Index is down 0.64. So modest moves on the downside, nothing as big as we've seen those ugly weeks before. But we did give up most of the gains for the week today. I mean, S&P was down 1.5%, but that means that 0.5% we were up already, and then the 1% down is actually what puts us in the red. Cryptos, again, same thing, close slightly weak, lower. Gold, 0.61%. Not really seeing gold do much here. I mean, gold is not really acting as a big, big movement in the commodity there. And oil, of course, still keeping strong. And it seems like that's just kind of in sight for the foreseeable future. I mean, we haven't really seen the prices of oil actually come down. So outside of that, as you can see, in the currency market, there was definitely movement. And as we get this back and forth in the equity markets, actually, let's go back and take a look at the chart for the S&P 500. So you can see that we were actually in a downtrend, and we got this nice little rally which is again from bottom to top was almost about 9%. We kind of give back some of the gains here. What we are getting is a consolidation, and this is where this was long overdue, this rally. And you go back to March, that was the last time we got this big rally. And you can see that rally was much stronger, much more up days, and it didn't have any hesitation. It did pull back for a bit, and then that's it. It went higher. I mean, this time around, look at the pivots on these candlesticks. They're not as easy. And again, over here, you can think that this wants to roll over, and you want to go bearish, and next thing you know, you get this big candle, and a candle like that yesterday, you think, hey, I want to buy this here, and then next thing you know, it pull back. So what we are getting in this market regime here is that you are likely to get bit screwed in the markets, is despite of either trying to go long or go short. And I think that's the kind of market environment that we are in this foreseeable future. I think the downside that we have seen, we might be plateauing on that downside for a bit, but that is not really giving us a great buy signal either. And I think the market's going to do that, where we just get a couple of up days and a couple of down days. And all those couple of up days and down days are convincing enough to kind of pull you back into those positions. But this is the kind of market environment that we're expecting until and unless we actually break out. We got the resistance here. If it breaks out above it, gets above the 50-day moving average, absolutely, we want to get behind that. But right now, I'm expecting more of that tug and pull effect and not really going anywhere. And that, again, is definitely a frustrating thing for the markets. But the good news is that when we take a look at currency markets, so currencies are moving really nicely here. And despite that correlation, currencies are doing their own thing. And that's a good thing, because one thing we look for is percentage moves, and we are getting percentage moves. You just have to be trading the right currencies. If you take a look at CAD yen this week, this thing was this could have been almost a 5% rally in the CAD yen pair. Again, that's a big percentage move if you're on the right side of the market. So that's why I still like the way how the currencies are moving. They're giving us percentage returns, and that's exactly what we need to go for. Aussie, again, had a nice day as well, a nice week. It was 1.35%, and the Kiwi actually was not taking part in that move. So this is where, if you really look at what's moving, we got the yen. The dollar actually did close positive. We got the CAD and the Aussie moving. So there's about 4 or 5 currencies that are really making a run. Outside of that, there are other currencies that are just not really taking a big part in either of those rallies or those breakdowns. Now, let's talk about the cryptocurrencies. And again, you can see the percentage return. It was not a big day, or not a big week, but when you look at the intraday changes, that's where you get that big change, where we were up 10, 12% on some of those cryptocurrencies earlier this week, that we actually give back most of those gains. So that's a very, very sign. So let's do a quick market analysis. Let's take a look at some of the other charts and look at the schedule and then actually see where else we can find an opportunity here. So starting with, we already looked at the S&P 500. If you take a look at the chart for the VT, they're doing the exact same thing. The VTs are not really outperforming, underperforming. The chart looks very similar. But if you take a look at the charts for crypto, again, look at this little slow grind lower. This is called catching a falling knife. At this point, these rallies, when they happen, they look exciting. Look at that percentage return we got on this one. But overall, I think the gravitational pull is more further to the downside. So whenever you get something like that, you want to only play it on the direction of. So it's not a currency. It's not something that you want to counter and trade, because the power is very strong. It's a -3. It's very similar to what we've been seeing in the Japanese yen. It's just one way. Now, let's take a look at schedule. Next week, again, it's going to be another interesting week. We start with the RBA on a Tuesday or a Monday night, depending on where you are. It's at the odd time of 12:30 a.m. Eastern Standard Time. So that's going to be a Monday night for some of you, and for all the East Coasters, it's going to be early Tuesday morning. So just make sure of that timing, because it definitely sometimes could create confusions. We had 2 central banks next week. RBA, we have the ECB. Again, ECB is not really doing much right now, like the other central banks that are actually making a move, trying to raise rates or be hawkish. The ECB is not. but that's where I think every central banks are going to be, scrutinized here. And that's where you get the big movements. They are the one that's actually driving a lot of these currency movements. It's not the economic reports. It's not the correlation. It's actually the central bank. So it's important to pay attention to all of these central bank announcements. The good thing is that we'll be actually meeting live for both the RBA and the ECB. So we'll be covering it live in the class and then see the price action and make a trade off of it. After that, on Friday, we have the Canadian Employment Report and the US CPI. So I really like next week. I mean, there's a lot more things on the docket, and I think that will give us some good opportunities. Now, let's talk about the week outlook. So I think we're likely to see consolidation, still in a bear rally formation in the markets. Not the time to go all out on a bottom here. I think markets could easily, create this market environment where both the bears and the bulls get punished, meaning that if you are trying to buy something, you get punished, and then you're trying to sell something and you get stopped out. That's easy to get, run through your stops around this time. So central banks are where I want to be a little bit more active. And as you can see, RBA rate statement, they're expecting a 0.35 change or rate hike. Remember last time when they did the rate hike, they actually went a little bit more than expected. And that was really helped the Aussie to strengthen off of that. So the expectation for next week is actually pretty high as well. I think I was reading somewhere it says 0.4%. There's an 80% chance for that. So a lot of that is already priced in, I think, at this point. But it's the forward guidance is where we're going to get the bigger move. And the same thing goes for the ECB. And economic reports on a Friday. I think Friday is important for CAD in the US, especially the US CPI. The inflation is always a topic of discussion, and I think that's something we need to pay attention to on Friday as well. So let's do a quick currency analysis. Let's take a look at charts, look at the scoring, and see what we are getting on the trend score, and then see what we're getting on the velocity scores. So in the crypto outlook, I'll save you guys some time as we go through all these charts. They're going to be -3 and a -3 on all of them. There's no other way I can paint a picture and say, well, this looks better than the other. They all look the same. And if, most of the traders that, or, people that buy cryptos, they're trading one side instead of two-sided. So I think at this point, you just have to really play or stay away from the cryptos because it's not really a right time to trade. Now, currencies is where things, the price action is. And let's actually take a look at dollar. And I had a lot of questions with the dollar because dollar has been quite a currency in the past couple months. We got this massive rally, which again marked a seven consecutive weeks higher. And then since then, you can see the dollar's kind of paired up some of those gains there. And I got a lot of questions about that because, is this where the dollar is done and we should start shorting? Or is this could be just a buying opportunity in a grand scheme of things? And I think at this point where the dollar is, it could go either way. One thing I did discuss in the non-farm payrolls report class this morning, as we were trading it live in the class, this thing has as long as it stays above the 50-day moving average, I don't want to be shorting this. I think if it do break that short support, there could be a further downside risk. But where it is right now, we can actually draw a line here and say, well, it's wedged in between 20 and the 50. Which means that we don't know which way it wants to go. So whenever you get something like that, it's better to be a little market agnostic and just look at things from a middle point and say, well, it could go either way. I'll jump on when it does. Until then, I will, trade it accordingly. So I think the big move is done already as the pullback goes, and that was almost a 50% retracement that took place. So the question is, where does it go from here? It could easily consolidate around this level for a bit, but we just realized when things start to slow down, we need to turn our expectations lower as well and wait for that movement to come. So 50 again as a support, and if it does break above, then we know that it wants to go higher. So one or the other way, we'll find out in the next coming weeks. So the velocity score was a +1, but overall trend score is not. So this is where it's better to focus if you're looking for a trend to see what's really trending, and look at the yen. Yen is back to the downside. It's falling back, and it's resuming its trend what we saw back in March. And at this point, this is catching a falling knife. We are back at the lows that we saw back in April, so I think further downside is likely unless a change happens in the markets and we see a bit of a rally. I don't see it coming. Again, let the charts tell you that instead of trying to go it blindly here. I think you have to be very cautious because you know exactly what happened with the yen back in March when we could say, well, I don't think it's going to go any lower, and next thing you know, it kept falling. So this is where path of least resistance. I mean, there's not a whole lot of support that we can find in this, so I think it's pretty probably in a free fall until it changes. Now, Swiss franc is another one that we did talk about. I've been actually watching the Swiss franc very closely because this was again this was weak until 2 weeks ago. The Swiss bank chairman came out and talked about that they're ready to act if the inflation gets out of control, and that actually lifted the Swiss franc up. But remember, they're not doing anything. It was just a comment, and a lot of times if there's no follow through, usually there's nothing changes materially, and then the price actually fizzles out. This thing hasn't gone anywhere. It's telling me that it's not really rallying off of it, but at the same time, it's not really plunging either. So that means that we need to just be neutral on Swiss franc until it breaks out above or lower. But I think it's not a currency of choice for me here as the price actions start to stagnate a little bit here. Now, going into euro, again, that's another currency that we need to pay attention to as we go into the ECB press conference this week. This thing has been slowly getting up, but notice that this trend is not aggressive. This is a very slow moving, but if you take a look at the entire month of May, that hasn't gone anywhere. So the trend score is a 0. Velocity score was a little +1 today. This is something, if it does break out, if the statement turns out a little bit more hawkish, I think there could be more potential. But for that, again, right now, we're not really seeing anything getting priced in because, there's no expectation that they are going to make much changes at this meeting. So we'll talk more about it when we take a look at some of the euro crosses. Now, what I really like is the pound here. Onto the short side, you can see that this thing is staying below the 20, the 50, and look at the score on velocity. This thing is moving. It's a -2. I really like this to trade it more on to further downside. So could it be next week? But that's something we'll have to wait and find out. And now let's talk about other currencies that are actually making a run. Canadian dollar, I mean, look at that run we got, right? Pull back off the 50. And that's why, I've been kind of saying, hey, watch out the 50 because Canadian dollar at one point looks like it was about to just roll over and the strength was gone. The 50 kind of stood in there and then look at the rally. I mean, I'm not saying the same thing happened with the dollar, but that's why we want to be paying attention to this 50 moving average. And this was a perfect pullback. We are right back at the resistance. And again, one of the things I always talk about is trading news events is, we get to buy the rumor, sell the news. When you get a news and then it continues to run, then that means that it actually has more legs behind it. We didn't see any selling on the news, which means that there's more further upside. And considering where the markets are, we need to just understand that the Bank Canada continues to stay hawkish, and since they are on this very bullish path, this is going to keep the currency elevated. So now let's talk about Aussie and Kiwi because Aussie is up on the docket, and you can see that we're getting a bit of a run up before the RBA, and that's again very typical. We noticed the exact same thing with Kiwi as well. We started to see a run up before the RBA and Z-rate statement, so we're getting a very similar thing. I think this next Monday or Tuesday is the bit of a deciding factor for the Aussie. If they do raise rates, but they don't provide a hawkish guidance, again, that would change things up. But the Aussie has been holding. So buy the rumors, sell the news. It's always something that we need to keep an eye on and look for, a much better price action if it does want to follow through. So we're already getting that run up before that news event, which is again leading me to believe that we could see a bit of a selling on the news if things don't get, if the conditions are not met. I mean, right now, expectation is a lot more hawkish from RBA, and if they follow through, then that's great. If they don't, then that's where you get the big move. So we'll keep an eye on the Aussie there. And again, Kiwi did bottom out, but notice that they did raise rates, but that did not cause a spark and a rally in the Kiwi. So right now, not expecting Kiwi to make any sort of a big run here. I think the Kiwi likely to underperform, especially until the Aussie stays strong. I mean, Aussie and Kiwi has been diverging, and the money's been going to the Aussie instead of the Kiwi. So for that return, we need to see money goes to the Kiwi and not as much in the Aussie. So we'll take a look at some pairings to kind of show you exactly where the divergence is taking place. So trend score, as you can see, CAD is a +3, Aussie is a +2. I mean, this is telling you, okay, in hindsight, where things are. But we still need to pay attention to velocity, because that's what's telling us what to trade at what time. And as you can see, CAD was a +3. The dollar and the euro was a +1 today, but a lot of things were kind of in the middle. You had the CAD on +1 side, and we had the yen as a -3. Again, that's where the big move was, and again followed by pound CAD as well. But a lot of things were in the middle, which didn't really give us a great opportunity. I mean, there was some good inter-week opportunity, but the way we closed, we're kind of right in the middle there. So as far as the bullish and the bearish trade goes, I think it's a good call to be bullish to CAD. And as for the bearish goes, yen has been on our list, and it will stay until it changes. And pound, I've actually added pound in there. I like -2 and a -2. I think there could be a decent opportunity in the pound in this coming week. So let's get down to some charts and take a look at some possible trades and see where we can find a good, decent risk to reward trade. So let's take a look at some of the interesting pairings. First thing first, we want to take a look at some of the charts that are actually moving and see where is the next setup. I mean, we really like CAD yen. You can see CAD yen did break to the upside. It actually kind of finished the consolidation that we got for a month and a half. And this was a spectacular run from here. It's almost a 5% run. So this is where I had questions from traders. Hey, where should be my target here? And I think this is where you need to go out to a long-term time frames just to find out the next level of resistance, because we are at the levels that we haven't seen for years. And whenever that happens, you need to be a lot more mindful of the path of least resistance. I mean, as you can see right here, we are back to the 2014 highs. If it breaks above that, I think this could go much higher than where it is right now. So CAD yen still stays on the long side of my staying. Right now, kind of looks extended. I would love to see a bit of a pullback to buy into. Still looks like a buy. Let's talk about things that actually could potentially move up next week. Again, some of the things that haven't broken out yet, but they could potentially will. Dollar yen. I know as we take a look at dollar basket, it wasn't a screaming buy or a screaming sell. But if the dollar do stay above that 50-day moving average and start to go higher, then I really like the dollar yen. And here's why. I mean, if you take a look at the long-term chart, you notice that where we are right now, even let's go on a weekly chart, we got a nice little bounce, got back to the resistance point. The next level of resistance after this is about 133 to 134. And I really like this area, and this is a good 300 pips to be made over here. So this is the one currency. If you like the dollar, I think dollar yen looks like a great pairing here to me. Now, outside of the dollar yen, let's actually talk about some other interesting pairs. And I want to talk about these pairs because of the correlation, and that's something you would need to pay attention to, like Aussie Kiwi. Aussie Kiwi is at the level, again, we haven't broken that level for a few years. So 110 has been where we're consolidating, but then we can see that we got a nice little bounce back up. We are back at the resistance, and this is how it looks going into the next week's RBA. If it does break above it, I think there could be further upside. This is a very important level of resistance. I mean, we can actually draw some lines here and say, well, from that resistance point to this point, I mean, there's still a bit of a room to run from 110 to about 113. So something to pay attention to. Now, let's talk about another pair that I really like, Euro Pound. So Euro Pound is the one that has been, again, same thing, has been not going anywhere. But then if the divergence started to take place, and if the pound stays weak and euro strengthen, I really like this on a further upside as well. And it has some areas which it can clear, and that will become a better buy. You can see that this is the neckline here for the resistance, and if it does break above it, I think that would be a good signal that euro is a better buy than the pound, and that's what we need to pay attention to. But this is a pair that I'm watching, especially for the ECB press conference. But for now, I mean, we like the pound short. I mean, let's go to pound CAD. This is another pair that we really like, and you can see that this is getting close to the levels that we haven't seen or broken since 2010. So interesting year that, we go back and, all these levels that we're noticing on these pairs that we haven't broken. So it's always nice to see things like that. But pound CAD also remains a good short. I mean, look at the bear rally that we got, and nice little pull back to the downside. So a lot of good opportunities. It's just being in the right place at the right time on, as we go into Monday. We will have another set of challenges for the markets because, it's not a crystal clear as it was, like a year ago where things were just on autopilot. Now we're getting a lot of volatility. So that means that markets could suddenly be up for a few days, and they could be down for a few days. So that makes a unique environment, especially if you're looking for some more volatility trades. I think this is the right environment to be in. And outside of those, we can also take a look at Aussie dollar. I mean, you can see that Aussie dollar broke that 72 level and then almost reversed back and tested that level. If I take a look at Aussie dollar, I mean, if you look at the weekly chart, this looks like a bear rally to me. I mean, we did break that new lows. We rally up into the moving averages, and you can see that we just stalled right around below the 20 to 50. So perhaps if the Aussie doesn't rally next week, maybe we can take a look at Aussie pairings. But I think right now, if you take a look at the Aussie basket, it's not really breaking lower. Just let's go on the Aussie basket here. It's been more restrained, and I think until the RBA statement comes out, it'll probably, kind of do the exact same thing. It did break above the moving averages as a basket, so that's why the Aussie has been a better buy than a sell. But I think next week will be a test if the RBA can help the Aussie to strengthen further. But again, every news event, you got to trade it the same way. Look at the pros and the cons. Look at the price action or follow through. And that's exactly what I'm looking for in the Aussie. I'm looking for a follow through. All right, so that's pretty much it. That's the wrap up here for the class. Again, I think the markets are risk on, risk off. I mean, you can kind of just put yourself right in the middle there. Cryptos, again, remains a short, so don't try to buy them. Don't quite catch a falling knife. Have a proper position sizing, RBA, ECB, and then on Friday we got those numbers. I think next week will be another great week. So be in the right side of the markets. Can't emphasize enough. If you're on the right side of the markets, you will catch good trades. So just make sure you're following the velocity scores and the trend scores just to make sure that you're on the trading the right side of the markets. Thanks for joining. Have a great, fabulous weekend ahead. And we'll see you guys in the next update and starting Monday. Take care. Cheers.